Hello everyone, good evening and Assalamu alaikum. This is JUNAID Khalid, the course facilitator for F7 financial reporting paper. Okay, today in this video we are going to practice the IAS 33, that is the earning per share, one of the most important standard with respect to financial reporting paper, that is ACCA. Okay, what is earning per share and how important this is with respect to the financial reporting paper? Let's quickly discuss it. First of all, EPS, this standard could be tested in your financial reporting paper, and this could be tested for around 4 to 6 marks. That is, 2 to 3 MCQs can be tested in this particular with respect to that particular accounting standard. Now, let's start with this. That what is earning per share? Basically, earning per share is a kind of ratio, and that is a very important ratio with respect to the investor's point of view. Whenever any investor wants to buy the shares of any company, so definitely there are certain criteria or the parameters on the grounds of which that shares will be bought, which means that always and whenever the investor wants to purchase the shares, will have a very critical analysis on the financial statement, that what are the assets, the liquidity, and the performance or the position of the organization. And while evaluating the performance and the position of the organization, the investor will also evaluate the earning per share. Now, what is the earning per share? The definition and the meaning itself is written over here. That is the earning, that is the income per share. That is what we are doing, that we are dividing. We are dividing the total earnings of the company into the number of ordinary shares. And the simplest formula to calculate the basic earning per share. The simplest formula to calculate the basic earning per share is that is the total earnings of the company. And the total earnings of the company is basically the profit after tax and divided by per share. Earning per share, that is the total number of ordinary shares. Total number of ordinary shares. Total number of ordinary shares. So by this, we are going to arrive at the earning per share, that what we are going to evaluate or analyze with respect to the investor's point of view, that if we just divide the total profit of the company to the number of shares, so what amount of earning or what amount of profit that we will be getting or we might get on the per share. For example, if the earning per share is $2, if the earning per share is $2, which means that on one share, the company is earning a profit of $2. Definitely, I will not be getting $2 as a return, because always the company will retain some amount for the future agendas or the future plannings. But I'll be getting some amount. So it means that is, if we divide the total profit to the total number of shares, so per share will be getting the profit of $2. So that is the earning per share. If this ratio is higher, definitely this is a very good side. This is a very good impact on the company's performance of the position, and it will create a very good impact on the investors as well. So earning per share, that is we are calculating the earning, the total earning of the company divided by the total number of ordinary shares. Okay, this is the basic formula, but let me have some evaluation or some modification in that particular formula. This is profit after tax, and remember, this is the profit after tax in which you have deducted each and everything, that is operating expenses, the finance cost, the income tax, each and everything. So that is the profit after tax, or the net profit we call it. Now, after calculating the net profit, there is always a return which is given to the irredeemable preference shareholders. Remember, let me give you some analysis for this one. We have preference shares. And we all know that what is the preference shares? Preference shares is basically the shareholders to whom the priority is given, the privilege is given. Now, the preference shares can be divided into two, that is the redeemable preference shares and the irredeemable preference shares. Redeemable preference shares and the irredeemable preference shares. And definitely, we all know that the redeemable preference shares are the part of your debt financing. We classify the redeemable preference shares as a debt financing. Why? Because this amount will be redeemed after a period of 5 or 10 years. However, irredeemable preference shares, it's a non-refundable amount, so we are going to classify it as an equity financing. And we all know that in the basic financial accounting, from the basic financial accounting, that if there is a redeemable preference shares, so any return on that redeemable preference shares is basically charged to the finance cost, which means it will be the part of your interest expense or the finance cost, and definitely it will be charged from P&L. But if you are giving a return on the irredeemable preference share, so this will not be charged from the P&L. However, it will be charged from the equity, that is from the retained earning. So while we have calculated the profit after tax, so from that profit after tax, it is quite obvious that the return or the interest on the redeemable preference shares is already being deducted. But yes, from here, the dividend or the return given on the irredeemable preference share is not yet being deducted. So what we are going to do, that is the profit after tax minus preference dividend. And remember, we call it as the preference dividend because any return which is given from the equity is known as dividend. So what we are going to do, that if the examiner has given you the preference dividend, and by default this is going to be the irredeemable preference dividend, so we are going to deduct it so that we can arrive at the final outcome, that is the final profit that will be distributed among the ordinary shareholders. So profit after tax minus preference dividend. Now divided by, here I have written that the total number of ordinary shares, but this is something a very vague, this is something that is not adequate. Why? Because during the year company issues certain shares or the ordinary shares. So we are going to divide it here, that is the weighted average ordinary shares, weighted average ordinary shares. Now by dividing this, we are going to arrive at the EPS, that is known as what? The basic EPS, that is known as what? The basic EPS, that is the basic earning per share. But if I talk about this basic EPS, the most important task that you have to do, I think the profit after tax, the numerator side is easy as you can think about it, but the major side that will tease you or will create a trouble for you is the weighted average number of shares, weighted average ordinary number of shares. This is something that will tease you. So in this particular lecture, we have to work out that how to calculate the weighted average number of ordinary shares, weighted average number of ordinary shares, and what are the consequences or what are the problems that we might face and how to deal, how to cater it. So we are going to deal in this particular lecture now. Okay, if we are doing the weighted average ordinary number of shares, and seriously speaking, in this particular topic or the standard of the chapter and the questions that we'll be practicing, so the main task is to calculate the weighted average ordinary number of shares. Now, how to calculate it? For this, we need to understand first of all that if the company, while company is operating, so company might issue shares. Company might issue shares. Now, let's talk about if the company is issuing shares. So there are two possibilities, or I would say there are three possibilities. Number one, either if the company is issuing the bonus shares. Number two, the company might issue the right shares, or there's a third possibility, the company is issuing the shares at full market price. At full market price. There are three possibilities. So there is a possibility that company is issuing shares during the year. So there are three possibilities. Either the company will be issuing the bonus shares, or the shares at the right, or the right shares, or the shares at the full market price. There is no as such consequences in this one, that if the company is issuing the shares at full market price, so there is no problem. But yes, there are certain rules and regulations that should be accounted for with respect to the bonus shares and the right shares. First, let's try to deal with the bonus shares. That how to deal with the bonus shares now. If we talk about the bonus shares, first of all, let's try to understand that what is bonus shares. Bonus shares are basically, we call it as a stock dividend. At times, if the company is having a shortage of fund, or if the company is not having the sufficient amount of cash balance, so usually what the company does, that it gives the stock dividend. And stock dividend means that is to give the dividend or the return in the form of shares. That is known as what? Stock dividend. The other name of the stock is shares basically. So we are giving the dividend. Oh, we are giving the return in the form of shares to the shareholders. And definitely this bonus shares are given to or offered to the existing shareholders, which means the free shares. Yes, the important part is free shares are given to existing shareholders. Always remember, free shares are given to existing shareholders. We are offering, we are giving the free shares to the existing shareholders. Number one. Number two, if we are giving the free shares to the existing shareholders, now what will be the impact? What will be the impact? Remember, these are known as what the bonus shares that we are giving to the bonus shares to the existing shareholders. So there is no inflow of cash. There is no inflow of cash. Basically, we are giving a benefit to our existing shareholders, which means we are giving a bonus to our existing shareholders. So what we have to do, that we need to calculate the bonus fractions. Once we will be solving the question, so what we have to do, we need to calculate the bonus fraction. And how it will be calculated, I'll let you know about this one. We have to calculate the bonus fraction, and bonus fraction is calculated. Bonus fraction is calculated is applied is applied to all shares before the bonus issue. That is the rule that you need to remember. Once we'll be practicing, we'll be discussing this rule. Bonus fraction is calculated and is applied to all the shares before the bonus issue. That if the company is issuing the bonus shares in mid of the year, so this bonus fraction should be applied. This benefit fraction should be applied to all the shares that were in issue before the bonus shares. And how the bonus shares will be, or the bonus fraction will be calculated. So bonus fraction will be calculated. Formula to calculate the bonus fraction is, that is the shares after bonus issue divided by shares after bonus issue divided by shares before bonus issue. By this, we'll be able to calculate the bonus fraction, and we need to apply that bonus fraction to all the outstanding number of shares before the bonus issue. And finally, if we have calculated the bonus fraction, so what we have to do now, the rule is IAS 33 states that if the company is issuing the bonus shares in mid of the year, so definitely you have to apply it retrospectively. You have to apply retrospectively, which means you have to apply is in such a way that the bonus shares were in issue right from the beginning. Mark my words, what I've said, that apply the bonus shares in such a way that these bonus shares were in issue right from the beginning. So it means that you have to apply, that is from the start of the year. That is, you will be assuming, you will be pretending that these bonus shares were in issue right from the beginning. Number one. Number two, the important task, that is to restate, the earning per share, restate the EPS, that is the earning per share of previous year, which means you have to apply it retrospectively, which means that you'll be applying the bonus shares as if like it was right from the beginning. So you have to restate the earning per share of the previous year by simply multiplying the inverse of bonus fraction, by simply multiplying the inverse of bonus fraction with last year EPS. This is something that I'm telling you, the rules and regulations, and while we will be solving the question, we'll be applying all of these rules. So first thing, that if the company is issuing the bonus shares, nothing to do with that one, just calculate the bonus fraction. How are we going to be calculating the bonus fraction? That is a bonus shares, that is shares after the bonus issue divided by shares before the bonus issue. And then you have to restate the last year EPS, because we are issuing the bonus shares in such a way that it was issued right from the beginning. Okay, now let's move on and try to solve the question and try to understand it. Okay, there is a question. Let's read out the question and the requirement. ABC company issued shares of 10 million on 1st January 2024. Company issued 50 million shares in July 2004. This is something the shares issued at. If nothing is written about the bonus shares, if nothing is written about the right shares, it means this is something the shares issued at full market price. And there is no as such complication for this one. It is something at a full market price. Okay. July 2024. One more thing, that whenever the month is given, that is July, it is assumed, it is by default that it is at the end of the month. It is at the end of the month, which means that these 50 million shares were issued at 31st of July. So whenever the month is given, it means it was issued and date is not mentioned, which means this is done at the end of the month. ABC made 142 bonus issue in September. Again, in September means that the bonus shares were issued at the end of the September, that is on 30th of September. Okay. Now, company had already 10 million shares, 50 million additional shares were issued during the year. Bonus issues were made in September 2024. Now, the profit after tax is $50,000. Accounting year ends on 31st December 2024. What we have to do, we just need to calculate the basic EPS. Now, first of all, let me write down the formula to calculate the basic EPS. In order to calculate the basic EPS is profit after tax minus preference dividend. Moving ahead, I will not be writing down the preference dividend. This is something very exceptional if the examiner would give you, so you are supposed to account it for, but this is not that important one. Okay, now in the denominator, we need the weighted average number of ordinary shares. Now, this is something that we need to calculate. Here you can see that the profit after tax is straight away given over here. That is, it is 50,000. Now we have to calculate the weighted average number of shares. Before we move on to the weighted average ordinary number of shares, weighted average number of ordinary shares, first of all, what we have to do, we need to calculate the bonus fraction. First of all, we calculate the bonus fraction, and then we are going to calculate the weighted average number of shares. Okay. So bonus fraction that we are going to calculate is, what was the formula to calculate the bonus fraction? That is the shares after bonus. Shares after bonus. Here it is, I guess. Yes, shares after bonus divided by shares before bonus. Now, how are we going to calculate it? Okay. If we just see that the bonus issue, okay, so we have bonus issue, that is the bonus shares is, that is, we have made 142. 142 means that the company will be issuing one bonus shares. Company will be issuing one new bonus share, one new additional, one new free share for every two held. For every two held, which means after getting the bonus shares, the number of shares would be 3, right? That after the bonus shares, if the shareholder is having 2 shares, so he'll be getting one more share. So it means after issuing the bonus shares, the total number of shares would be 3, and before the issuance of bonus shares, we have 2 shares. So shares after bonus divided by shares before bonus. So this is simple, the bonus fraction. This is why quite simple, that we need to calculate the bonus fraction, shares after bonus divided by shares before bonus. So after issuing the bonus shares, that is 1 share, the total number of shares would be 3 divided by the 2, that is the shares before the bonus is 2. So that is the bonus share. Now what we are going to do? We are just going to calculate the weighted average number of shares. Now, how are we going to calculate the weighted average number of shares? This is something very technical and you need to learn, you need to understand it. weighted average number of ordinary shares. Number of ordinary shares. Okay, now for this, what you have to do, number one, first of all, on 1st January, we were already 50 million shares in issue. Okay, now just listen to me very carefully. I'm doing it very slowly and step by step. Now you just let me know that on 1st January we were having 50,000 shares, and after how many months the further shares were issued? If you just see, the further shares were issued on July. That is in the month of July, at the end of the July, basically. So it means January, February, March, April, May, June, and July. And I told you that if date is not mentioned, it means it was issued at the end of the month. Now, what we are going to do, that we are going to analyze it, that after how many months or for how many months this 50 million shares were in issue. So we just calculated that from January till the end of July, that is for the period of 7 months. That is for the period of 7 months, 50,000 shares were in issue. So multiply by 7 and divided by 12. Multiply by 7 and divided by 12. Now what happened? What happened that after that is after January, that is 10 million. Sorry, it was 10 million. My bad. It was 10 million. So 10 million shares, that is 10,000 shares from January till July. 10,000 shares were in issue in the month of January, and till July, it was 7 months. So which means 10,000 shares remains outstanding. 10,000 shares remains outstanding throughout the 7 months. After 7 months, what happened that in the month of July or at the end of July, or we can say that in August, to make it very simple, let's make it in August, 50,000 further shares were issued. 50,000 shares were further issued. Now, 10,000 shares were already in issue and further 50,000 shares were issued, which means now total 60,000 shares would be there. Are you getting a point? So 10,000 shares were issued on 1st of January, and from January till the end of July, that is for the 7 months, these 10,000 shares were in issued. So we have just multiplied it by 7 and divided it by 12. Now, in the month of August, what we have done, we have issued further 50,000 shares. Now, which means 50 plus 10, that is total 60,000 shares are in issued, and till what date or what month these shares were in issue. So if you just see that further shares, that is the bonus shares, were issued in the month of September or at the end of September, which means August, right? August and September, that is for 2 months, August and September. So we have multiplied it by 2 and divided it by 12. That is for the 2 months. These 60,000 total number of ordinary shares were in issue for the next 2 months, that is August and September. Now, what happened in the end of September or the October? What happened that the company issued bonus shares. Company issued bonus shares. Now, company is issuing the bonus shares, that is 142. Now, there are two strategies. Number one, we were having total 60,000 ordinary shares in issue. Okay. Now, on the basis of this one, company is issuing 142 bonus. If you just calculate, that is 60,000 multiplied by 1 and divided by 2, which means company will be issuing on the basis of the existing shares, company will be issuing 30,000 shares, and in aggregate 60 plus 30, this will make 90,000 ordinary shares. Please do remember what I'm doing. I'm writing down the balances over here. I'm not writing down that how many shares were issued. I am just writing down the balances of the shares. Earlier there were 10,000 shares, further 50,000 shares were issued, so it makes 60,000. Further 30,000 bonus shares were issued, so it will make 90,000. I can directly calculate this 90,000. How? That is 60,000 shares were issued, and now the company is issuing 1 bonus shares, which means every shareholder will have 3. So multiply by 3 and divided by 2. So this will make directly 90,000. But if it is too complicated for you, you can you can make the simple calculation, that is 60,000 multiplied by 1 and divided by 2, which means the company will be issuing 30,000 bonus shares. So in aggregate, the total number of shares will be 90,000 and Till the end of the year, there are no further issues. So which means October, November, and December, these are 3 months. So you can cross check it. You can have a cross for this one. That is 7 plus 2, 9 plus 3, 12. So this should make always 12 months. So these are that is something what we have done. We have calculated the outstanding number of shares that were accrued or in issue throughout the year. Now, what we have to do? IAS 33 states that since you have issued the bonus shares on 1st of October, you have issued the bonus shares on 1st of October. This is something that you have issued the bonus shares. Now, what you have to do, that you need to apply the bonus fraction which you have calculated. On what shares you have to apply that bonus fraction. You have to apply the bonus fraction on all those shares. Remember, please mark my words. On all those shares, apply the bonus fraction on all those shares that were in issue before the bonus shares. Which means in this 90,000, the bonus shares are already been in issue. So which means we have to apply the bonus fraction on all the shares that were in issue before the bonus shares. That is, we have to apply the bonus fraction on this 10,000 and the 60,000. That's it. We are not going to apply the bonus fraction on this one, on the 90,000. Why? Because the bonus shares are already in issue. So what we have done, we are assuming that we are applying this issue of bonus shares retrospectively. We are applying this issue of bonus shares as if these shares were already in issue right from the beginning. So we have applied the bonus fraction on the previous shares. Now let's try to calculate it. 10,000 multiplied by 7 divided by 12 multiplied by 3 divided by 2. So this will make 8750. 60,000 multiplied by 2 divided by 12 multiplied by 3 divided by 2. So this will make 15,000, and 90,000 multiplied by 3 and divided by 12. So this will make 22,500. So the outstanding weighted average number of shares would be 22,500, 15,000 and 8750. So this will make 46,250. This is something, the weighted average number of ordinary shares. So what we are going to do, we are going to divide it by 50,000. Okay, one more thing, that it is we just take it as 50 million. Okay, this is something 50 million. So we have taken 50,000 divided by 46,250. 46,250. So 50 million profit, that is 50 million profit. 50 million profit divided by 46,250. So 50,000 divided by 46250. So this will make the EPS or the basic EPS 1.08. That is 1.08. This is known as what? The basic earning per share. This is known as what? The basic earning per share. I hope this is clear to you now. Okay, let's move on to another question. Okay, first you need to pause the video and try this at your own, and then definitely you can see that how I'm going to solve this question. Okay, let's move on. XYZ company issued shares 100,000 on 1st January 2004. Again, on 1st January 2004, already 100,000 shares were in issue. In March, and in March means that is at the end of the March. That is after January, February, and March. After 3 months, company issued 50,000 shares. Nothing is mentioned. It means it is at the full market price. In June, okay, in March, 50,000 ordinary shares were issued, and again, in June, that is at the end of the June, company issued 200,000 shares. Again, nothing is mentioned. It's not the right issue. It's not the bonus issue. It is basically the full market price. Okay, in September 2024, yes, 40% bonus shares were issued. Now, these are the bonus shares that have been issued. Profit after tax for the year is 60,000. In the year to 31st December 2023, the basic EPS was 2.345. Accounting year ends on 31st December 2024. What you have to do, that is to calculate the basic EPS for 2024 and the restated EPS of 2023. Yes, In this question, we are definitely going to learn how to calculate the restated EPS. Okay. First, solve the question for the basic EPS, and then we are going to calculate the restated EPS for the last year. Okay, basic EPS. If you are going to calculate the basic earning per share, we know the formula for this one. That is a profit after tax divided by weighted average number of shares. Weighted average number of shares. Number of ordinary shares. Okay. So profit after tax. We know the profit after tax. What we have to do, we need to calculate the weighted average number of shares, for which what we have to do, first of all, we know that there is a bonus shares. So for bonus shares, first we are going to calculate the bonus fraction, and then we are further going to solve this question. So bonus fraction. Now, how the bonus fraction will be calculated? It's quite simple. So, however, the bonus fraction is given in terms of percentage. Doesn't matter, which means the company is issuing 40% bonus shares, which means the one who has 100 shares will be getting 40 shares, right? You just take the basic price, even 10 or 100. So I just make it very simple that if the person is having 100 shares, so he will be getting the 40 ordinary shares, 40 shares. So it means that if after getting, and don't forget the formula for the bonus fraction, that is the shares after bonus, shares after bonus divided by shares before bonus. Now, if you just look at the after bonus, if the person or the shareholder is having 100 shares, so you'll be getting the 40 shares. So after bonus, it is going to be 140, and before bonus, obviously it was 100. So we can just divide it, 140 divided by 100. So this will make 1.4. 1.4. This is the bonus fraction. This is the bonus fraction. It could be either in decimal form, it could be in the fractional form. Both are acceptable. You can keep it as 140 over 100, or even you can divide it as 1.4. Both are acceptable. So we have calculated the bonus fraction. Now what we are going to do, the most important task, that is to calculate the weighted average number of shares. Weighted average number of ordinary shares. So how are we going to calculate it? First of all, the 100,000 shares were in issue on 1st January. So on 1st January, 100,000 shares. Just forget about the bonus fraction right now. We're just calculating the months first. So when the change was arised in the month or at the end of the March, which means January, February, and March. So for 3 months, multiply by 3 divided by 12. So in the month of April, that is at the end of the March, or we can say that in the month of April, full market price, 50,000 ordinary shares were issued, which means 100,000 plus 50, this will make 1,50,000. And when the another change was arise, that is in the month of June. That is March. We are not going to calculate March, sorry. April, May, and June. That is again for the 3 months. That is April, May, and June. Obviously, June will be counted as it is at the end of the June. Now, at the end of the June, that is, we can say that July, that is of 1st of July, what happened? That the company issued again 200,000 shares. 200,000 shares. 200,000. So this will make 350, right? 200 plus 150, that is 3,50,000. So now it's 3,50,000 shares that is issued in the month of July, or at the start of the July, and this will remain till the end of September. That is July, August, and September. Again, it's a coincidence that it will be multiplied by 3 and divided by 12. So we have calculated this 350,000 multiplied by 3 and divided by 12. Now what happened? That in the month of September, or we can say that in the month of October, right? In the month of October, now we are going to issue the bonus shares. We are going to issue the bonus shares. Okay, now bonus shares are going to be issued. That is 40%. 40%. Now this 40% will not be applied on 100,000. The outstanding number of shares that were in issue, that is total, there were 350,000, and definitely we will be giving the bonus on these 350,000 shares. So 350,000 and 40% bonus is being given. So 350,000 multiplied by 40%, which means the company will be issuing 140,000 bonus shares. And remember, we are going to write down the balance. So the total number of ordinary shares would be 140 plus 350. So this will make 490,000. So after the issuance, there will be 490,000. And after bonus shares, there is no further shares issued in the accounting period, October, November, and December. This will be multiplied by 3 and divided by 12. If you just want to cross it check, that is 3 plus 3 plus 3 plus 3. This will make 12, which means we have calculated 100%, and the calculation is 100% perfect. Now, the second task, that what you have to do, you need to apply the bonus fraction on all the shares that were in issue before the bonus shares. And if you just look at that, this bonus fraction will be applied on this, and then this, and then this is going to be applied on this one. And definitely it is not going to be applied on this one, because what I've said, that the bonus fraction will be applied on all the shares that were in issue before the bonus shares. So what we have done, we have applied the bonus fraction on all the previous shares. Now let's try to calculate it. So 100,000 multiplied by 3 divided by 12 and multiplied by 1.4, that is 35,000. Then 150,000 multiplied by 3 divided by 12 multiplied by 1.4, this will make 52,500. And then 350,000 multiplied by 3 divided by 12 multiplied by 3 divided by 12, 87,500 multiplied by 1.4. So this will make 122,500. Let me check. 350,000 multiplied by 3, 12 divided by 1.4, yes, 122,500. And finally 490,000 multiplied by 3 divided by 12, and again it's 122,500. Okay, now let's have a total for this one. 122,500 plus 122,500 plus 52,500 and then 35,000. So this will make 3,32,500. So these are the weighted average ordinary number of shares. Now let's calculate the basic EPS, for which we need the profit. So 60,000, or we can say that it's not 60, it's 60 million. Let's say that's 60 million. Or we can okay, let's consider it 60,000 again. We have taken all the values, and complete values have been taken. So 60,000 is basically the profit after tax. Okay, 60,000 is basically the profit after tax, and the weighted average number of shares is 332,500. So 60,000 divided by 332,500. So this will make 332,500. This will make 0.018 dollar. Now one more thing that you should learn, that it is $0.18. We can also represent it in terms of cents. So if you are going to represent it in terms of cents, what you have to do, you just need to multiply it by 100. If you will multiply it by 100, you will get the answer 18.0. That is 18.0, and we write it as like cents. So it's 18 cents, or we can say that it's $0.18. Both are acceptable, but you need to understand that if you're calculating in dollars and it's in decimal, just multiply it by 100. You will get the answer in terms of cents. Why I'm telling you? Because at times the examiner will ask you the answer in terms of cents. So this is 18 cents. So the earning per share is 18 cents. Now what you have to do? Now listen to me very carefully. This is something that we have calculated the basic EPS. Now here it is saying that you need to calculate the restated EPS. Which means that the last year EPS should be restated. Why? Because we are applying the bonus shares in such a way that it was in issue right from the beginning. So what we have to do in order to calculate the restated EPS of the last year, restated EPS of 2023. So the last year EPS was 2.345. All what you have to do, you need to apply the inverse of the bonus fraction, that is the multiply by 100 and divided by 140. So this will make 2.345 multiply by 100 divided by 140. So this will make $1.675. This will make $1.675. So the current year EPS is $0.18 and restated EPS would be $1.675. I hope this is clear to you now. Yeah. Another question is, and I would definitely recommend you to please pause the video, try to solve it, and then just look at the solution. Okay, this is very simple question, and the main requirement of this question is you need to calculate the restated earning per share, and definitely examiner might ask you for directly a very straightforward question, that is to calculate the restated EPS. And do not forget to please note down the formula that the restated EPS will be calculated as last year EPS. You should have last year EPS multiplied by the inverse of bonus fraction. Fraction. Now, last year EPS, what is saying that in the year 2024, the company issued bonus shares for 143. That is a bonus. One bonus shares will be issued for every 3 bonus shares. Basic EPS is for the 2023 was 5.25, which means the last year EPS was 5.25. Calculate the restated EPS, for which we need the inverse of bonus fraction. And how we are going to calculate the bonus fraction? It's quite simple. That is the formula to calculate the bonus fraction is shares after bonus divided by before bonus. So the bonus shares after the issuance of the total number of shares after the bonus shares would be, if we are issuing the 1 bonus shares for every 3, which means after bonus there will be 4 shares, and before bonus we are having 3 shares. So 4 by 3 is a bonus fraction, but you need to multiply it by the inverse of bonus fraction, that is multiply by 3 and divided by 4. So this will give a result for 5.25 multiplied by 3 and divided by 4. So this will give a result for $3.93. This is basically the restated EPS. This is basically the restated EPS. I hope that you guys are getting this point. So examiner might ask you that kind of a simple question. Now let's move on towards the another and the most important area, that is the right issue. Now what is right issue? As you've seen that the company is issuing the bonus shares to their existing shareholders. Likewise, the company might issue the right shares to their existing shareholder. First of all, right shares are offered to existing shareholders. Again, like in the bonus shares are issued to the existing shareholders. Right shares are offered to existing shareholders. Why I have written that offered to the existing shareholders? Because there is an inflow of cash. Yes, we'll be issuing the right shares to the existing shareholders, but not at free of cost, but at lower market price. Yes, we'll be issuing the right shares at lower market price. That is, we are issuing the shares to the existing shareholders, but at the lower market price. For instance, if the share price of the company is $20, so we are issuing the shares to our existing shareholders at $14 per share. So which means that we are issuing the shares at the lower market price. So there is a possibility that existing shareholders might not purchase the shares, because the shareholders will have to pay the amount. So there is a possibility that existing shareholder might not opt this option. So therefore, I have used the terminology that right shares are offered to the existing shareholders first, and if they will not opt, definitely it will be issued to the outsiders. Now, one more thing. that these right shares are offered to the existing shareholders, but these are issued at the lower market price. Now, what we have to do, that if we are issuing the right shares, don't forget that there is again the element of benefit. There is again the element of benefit. And what is that element of benefit? That if the market price of the share is 20 and we are issuing the shares, we are issuing the right shares at $14. Don't you think that there's a benefit for the shareholder? Yes, there is a benefit for the shareholder. So it means there is a benefit, or we can say that there is a bonus to the existing shareholders. There is a bonus for the existing shareholders. So what we have to do, we are again going to calculate the bonus fraction over here. Yes, here again the bonus fraction will be calculated. Again, the bonus fraction will be calculated. Here we are going to calculate the bonus fraction. And how we are going to calculate the bonus fraction? How we are going to calculate the bonus fraction in this particular situation or the circumstances? The bonus fraction that we are going to calculate it, that is, we are calculating the bonus shares, or sorry, the bonus fraction, that is the share price before right issue divided by TERP. Now, what is that TERP? I'm going to explain it in the fourth point. So first thing that we need to calculate the bonus fraction, but before we calculate the bonus fraction, we need to understand the TERP. The TERP stands for theoretical X right price. Now, what is theoretical X right price? It's the share price. If I just give you the definition, it's a share price after the issuance of right shares. Yes. What is theoretical X right price? It's a share price after the issuance of right shares. That once you'll be issuing the right shares, there will be a side effect. There will be a negative side for the company's share price. Why? Just try to imagine that if the market value of the shares is 20 and I'm issuing the shares to the existing shareholder for $14 per share, assuming that you are the shareholder, I have given you the share for $14 and you know that the market price is 20. What you are going to do, obviously the majority shareholder will try to sell the shares so that they can gain, so that they can have a profit of $6 per share. So what the shareholders will do, shareholders will go to the market and they will try to sell the shares so that they have a gain on that disposal of shares of $6 per share. So once you will try to sell the shares and many of the shareholders will try to sell it, obviously there's a concept of demand and supply. So everybody's going to sell the shares. So definitely the market price after the issues of right shares will goes down. It will be declined. So this is what we call that the theoretical X right price. That is the share price after the issuance of right shares. So once the company will issue the right shares, there is a negative side, there is a drawback, there is a consequences of it, that after the issues of right shares, the right price or the share price of the company would go down. Why? I have given you the logical reason for this one, because the majority of the shareholders will try to sell the shares in the market. So if they are trying to sell the shares in the market, so obviously the market price of the shares will go down. So what we are going to do, if I just write down the very simple formula for this one, this is the formula which is given by the IAS 33. If I make it very simple, that is the share price before right divided by share price after the right. Am I right? It means theoretical X right price. What does theoretical X right price means? It's a share price after the issuance of right shares. It's a share price after the issuance of right shares. So this is the formula. That is the share price before right, share price after the right. Now, this information will always be given in the question. This will always be given in the question. All what you have to do, you need to calculate the theoretical X right price. How it will be calculated, we'll solve the question and we'll try to evaluate that how to calculate the theoretical X right price. So what you have to do, if the company is issuing the right shares, two things that you need to keep in your mind. You need to calculate the bonus fraction, but unfortunately, you cannot calculate the bonus fraction unless you have not calculated the theoretical X right price. So you have to calculate the theoretical X right price. Now, one more thing. Uh, Once we'll apply the question, we'll solve the question, we'll apply that rule that the bonus fraction which we have calculated in the right shares, don't forget that there is an element for the benefit. There is an element of bonus. So the bonus fraction will be applied to all the shares. The same rule is applied. Same rule is applied as we have done in the bonus fraction, in the bonus issue. Bonus fraction will be applied to all the shares, that were in issue, before right shares. Before right shares. Before right shares. Bonus fraction will be applied to all the shares that were in issue before the right shares. And not only this one, the last point, that this will also be applied as a retrospectively. So what we have to do, we also have to restate the previous year EPS. Previous year EPS. And how are we going to restate it? In the same manner as we have done in the bonus issue. That is by multiplying with the inverse of the bonus fraction, and the bonus fraction that we have calculated over here. So this bonus fraction will be multiplied by the previous year EPS. No. This bonus fraction will be applied, or the inverse of the bonus fraction will be multiplied by the last year EPS. And this all will be done through a practice question. So let's try this one. Question number 4 is the basic one. Let's try to solve this one. ABC company issued right shares, that is 142 for $12. This is something the right shares are issued. Right shares are issued at this market price, that is $12. Share price before the right issue was $16. And the company issued the right shares at a price of $12. And the price of the right shares before the issue was $16. Calculate the theoretical X right price and the bonus fraction. Let's keep it very simple. The first question is quite simple. First of all, we are going to calculate the TERP, because we know that bonus fraction cannot be calculated unless we will calculate the theoretical X right price. So how are we going to calculate the theoretical X right price? We are going to make 3 columns. Number 1, the shares. Number 2, the value. And the third one is the total value. Okay. Now, just listen to me very carefully. The company is issuing one right share. It means we are issuing the one right share. And we have issued that one right shares. If we are issuing the one right share, so we have issued the one right share at a price of 12, right? Company is issuing the right shares. How many right shares the company is issuing? 1. And the company has issued the right share for $12. So it means one right share is being issued at a price of 12. And how many shares the shareholders have? That is the 2. There are 2 shares the company or the shareholders have. Already the shareholder is having 2 shares, and the value of these 2 shares was 16. Am I right? That the share price before the right issue, once the right issues were not in action, so the company was having, or the shareholders were having 2 shares, and the value of shares before the right shares was 16, right? So what we are going to do, we're going to multiply it. That is one share, and the value of one share is 12. So the total value would be 1. So we were having, or the shareholder were having 2 shares, and the value of one share was 16. So which means 16 multiplied by 2, this will make 32. So the total value would be 32 plus 12, that will make 44, and the total number of shares is 3. We can say this, that the value of 3 shares is 44, right? Let me repeat it again, that one share, the share, the right share which we are going to issue, the one share that we are going to issue is the market price is 12, and the 2 shares that the shareholders are already having, that is 2 shares that are already having, the value of those 2 shares, the per share value is 16, which means in times this will make 32. So the total value is 44 and the total shares is 3. We can easily say this, that the value of 3 shares is 44. And if we want the value of one share, so what we are going to do is that we are going to simply divide 44 divided by 3, 44 divided by 3. So 44 divided by 3, this will make 14.6. What is this 14.6? It is basically the theoretical X right price. Don't worry, we will be having few more questions. So we will be calculating the theoretical X right price multiple times. So you will get the idea for this one. So theoretical X right price is 14.6. Now what we have to do? We need to calculate now the bonus fraction. Now we're going to calculate the bonus fraction. How are we going to calculate the bonus fraction? I told you the formula for this one. A very simple formula, that we are going to calculate the bonus fraction, that is BF. It's not the best friend, it's bonus fraction, and we are calculating it by the share price before right issue. Before right issue, and this information will always be given in the question. Before right issue divided by theoretical X right price, that is TERP. So before right issue, the price of the shares before the right issue was $16, and the theoretical X right price that we have already calculated is 14.6. So just divide it. 16 divided by 14.6, this will make 1.09. 1.09. Both are acceptable. 16 divided by 14.6, it's a bonus fraction. If you divide it, it's acceptable. Both are acceptable. Now, this is something that we have calculated, the bonus fraction. Now, what we have to do? We need to calculate the weighted average number of shares. But for this, there is no need, because EPS is not required. We will practice for the weighted average number of shares in the next question. So here, there was 2 requirements. Number 1, to calculate the TERP, and number 2, to calculate the bonus fraction. So we have calculated it. Now, let's move on towards another question. I would request you to pause the video, at least calculate the theoretical X right price and the bonus fraction. The other part, that is the restated EPS, I will calculate it obviously. Now, ABC company issued right shares 143 at a price of $15. Share price again before the right issue was 20. In 2023, basic EPS, 2023 means it's the last year, okay? Calculate the theoretical X right price, bonus fraction, and the restated EPS of 2023. We are doing the accounting for 2024, okay? Now, first of all, if you want to calculate the theoretical X right price, how are we going to calculate it? Let's practice it again so that we have a very good understanding for this one. We are going to make 3 columns. Number 1, the shares. Number 2, the value. And number 3, the total value. Okay. We are going to issue 1 right share. Yes. For every 3. Yes. And 1 right share that we are going to issue for $15. Yes. And the 3 shares that already the shareholders were having, and the price of these shares were 20. Now, let's multiply it. It's 15 multiplied by 1 is equal to 15. 20 multiplied by 3 is equal to 60. So the total value would be 75. Total number of shares is 4. So it means the value of 4 shares is 75. If we want to calculate the TERP, that is the theoretical ex right price for one share, that is 75 divided by 4. So it will make 75 divided by 4. 75 divided by 4. This will make 18.75. This is 18.75. So this is theoretical ex right price. And the second step that we need to perform, that is to calculate the bonus fraction. And how the bonus fraction is being calculated? Very simple. That is the share price before the issuance of right shares and divided by TERP. I'm sorry, I'm not writing down the full formula. So before we had a share price of 20 and theoretical ex right price we have calculated is 18.75. One more thing that we can note it down for your confirmation side, for your confirmation that the answer is correct or not. This answer will always be more than 1. This answer will always be more than 1. It will always be greater than 1. So it's 1.06. Both are acceptable. Bonus fraction, this and this, these are known as what? The bonus fractions. Okay, now what we have to do, we have calculated the TRP, yes. Bonus fraction, yes. Now the restated EPS. So last year EPS was $5. Last year EPS was $5. That is the EPS of the last year, that is 2023, was $5. If we want to calculate the restated EPS, nothing to do with that one, just multiply it by the inverse of the bonus fraction, which means I'm going to multiply it by 18.75, divide it by 20. So this will make 5 multiplied by 18.75 divided by 20. This will make $4.68. This is known as what? The restated EPS. Are you guys clear with this one? Now we are having a very important question, and that is how to deal with the bonus and the right issue. If both the bonus as well as the right shares both are given in the question, so how to account it for? That is something that you need to understand. And many of the students face difficulties, a lot of difficulties in this type of questions. So let's try to solve it now. XYZ company issued bonus shares 1 for 2 and right shares 1 for 3. The share price before the right is 25 and the right issue price is $20. In 2023, basic EPS was $4. Calculate the restated EPS of 2023. Now, we are not supposed to calculate the EPS for the current year. We're not going to calculate it. We just need to calculate the restated EPS. Now, remember, in order to 2023, what you have to do, that is the EPS for the 2023 is 4 multiplied by the inverse of the bonus fraction. Now the point is how we are going to calculate, how we are going to calculate the inverse of bonus fraction. For that, we need to calculate the bonus fraction first. How we calculate the bonus fraction? How we can calculate the bonus fraction? For which? For this bonus fraction, don't forget, we need the theoretical ex right price. Are we getting a point? Just look at here. Just look at here. How we have calculated the bonus fraction? It's the share price before the right issue divided by the TERP. So which means if you want the bonus fraction, definitely you have to calculate the theoretical ex right price. So in order to calculate the restated EPS, always remember you need to calculate the bonus fraction. And in order to calculate the bonus fraction, you need to calculate the theoretical ex right price. So how we are going to calculate the TERP? How are we going to calculate the theoretical ex right price? For which, again, let's have a practice for this one. Shares, number 2, value, and number 3, the total value. Now, shares, right? First of all, what we have, that we have right shares. Okay, yes, there is bonus shares, and we will account it for later on. First, we are dealing with the right shares. Okay, so we have one. We are issuing the 1 right shares for every 3, and the right shares that we are issuing at a price of 20. Right, 1 right share is issued at a price of 20, and the shareholders were having already 3 shares. The price was 25. Now, 20 multiplied by 1 is equal to 20. 25 multiplied by 3 is equal to 75. So the total value would be 95, and the number of 4 shares is 95. And if we are going to calculate the value of 1 share, that is 95 divided by 4. So 95 divided by 4 will make 23.75. It is something the theoretical extra price. Now we need to calculate the bonus fraction as well. Yes. So the bonus fraction, in order to calculate the bonus fraction, share price before divided by TERP. So before, the share price was 25, and after, that is TERP is 23.75. So the bonus fraction is 25 divided by 23.75. We can divide it or we can keep it as it is. Okay. So we have calculated the bonus fraction, but remember, this bonus fraction is for right issue. This bonus fraction is related to the right issue. We need the bonus fraction for bonus issue as well. Why? Because if we want to restate the EPS, we need to multiply it with the inverse of the bonus fraction of both the right as well as the bonus issue. So which means we need to multiply the bonus fraction, we need to multiply with the inverse of the bonus fraction of both, that is the right as well as the bonus issue. So we have calculated the bonus fraction that is related to the right. Now we are going to calculate the bonus fraction that is related to the bonus shares. And the bonus fraction for the bonus issue is very simple. How? That is the shares after bonus issue. Shares after bonus issue. So if you just calculate it, the shares, we are issuing the 1 bonus shares for every 2. So after bonus issue, there will be total 3 shares divided by 2. So this is the bonus fraction, and that is related to the bonus issue. That is related to the bonus issue. Now what we have to do, we need to multiply it with the inverse of, first let's inverse it, that is 23.75 divided by 25, and the inverse of this bonus fraction, that is multiplied by 2 and divided by 3. By this, we'll be getting the restated EPS of 2023, 4 multiplied by 23.75 divided by 25 multiplied by 2 divided by 3. So this will make $2.5. That is the EPS. The restated EPS of 2023 is 2.53. $2.53. That is the basic EPS, or we can say it as it's a restated basic EPS for 2023. So this was a very good question. You need to understand. Please try this question at your own and watch this video again so that you have a very good understanding for this one. Okay, now let's move on towards the last question. Let's move on towards the last question for this one. And in this question, we are having a price before the right shares was 15 and the profit after tax is 80 million. All what you have to calculate is the EPS, that is the basic EPS. And how are we going to calculate the basic EPS? That is the profit after tax divided by weighted average number of shares. Now this is going to be the full-fledged question. I would recommend you to please try this question at your own first and then watch this video. Okay, now first of all, how to deal with that question? First of all, we calculate the bonus fraction for bonus issue. Bonus fraction for bonus issue is, it's very simple. It's quite simple. First, do the easiest task. And how are we going to calculate the bonus fraction? That is shares after bonus divided by shares before bonus. Shares after bonus means that the company is issuing 20% bonus. So after bonus, it would be 120, right? Assuming the shareholders are having 100 shares. So after the issuance of bonus shares, it would be 120 divided by 100. So this is the bonus fraction. We can simplify it by dividing or by cancelling out. There's no need to do that one. Don't waste your time on doing these type of clerical work. So bonus fraction is 120 over 100. Now, second task that we are going to do, and remember, whenever we are issuing the bonus shares, there is only thing that you need to calculate is the bonus fraction. But yes, if we are issuing the right shares, there are multiple things that you need to account it for. You need to account it for some, first of all, the TERP, right? Theoretical X right price. And how we are going to calculate it? Again, we are going to prepare three columns. Number one, the shares. Number two, the value. And the third one is the total value. Okay. Now, shares. If you talk about the right shares, 40% right shares are issued, which means if I take it as company is issuing 40 right shares, right? If the company is issuing the 40 right shares, and the company already having, or the shareholders are already having 100 shares, right? The base is 100 and the company is issuing 40 right shares. So 40 shares are issued, and assuming the shareholders are having 100 shares. Now, the 40 shares that we are issuing, the price of those shares is 12. Right shares were issued at a price of 12. So its value is 12. Now, the shares that already the shareholders were having, the price before the issue was $15. It's 15. Now let's multiply it and we'll get the answer for this one. So 40 multiplied by 12, it will make 480, and 100 multiplied by 15 will definitely make 1500. That is 1500. Okay. So let's have a total for this one. 1500 plus 480, that is 1980. Okay, and this will obviously make 140. So the price of 140 shares is 1980. So 1980 divided by 140. So this will make 14.1. So 180, sorry, 1980 divided by 140. So the TERP, that is the theoretical X right price, is 14.14. That is theoretical X right price. Okay. This is what we have calculated the TERP. Now, another thing that we have to do is to calculate the bonus fraction. Now, this is something, the bonus fraction we are calculating for the right shares. Okay, this is related to the right shares. Bonus fraction, but this is something for the right issue. Okay. Now, how are we going to calculate the bonus fraction? That is the share price before the right. Let me write down the formula again so that you remember, you recall it. That is the share price before right issue, divided by theoretical X right price. Now, share price before the right issue was share price before the right issue was, yes, it's 15, right? 15, and we have already calculated the theoretical X right price, that is 14.14. So 15 divided by 14.14, this will make 1.06. And I've told you that this is acceptable, or you can also write it down as 1.06. Okay. This is what we have calculated, the bonus fraction. We have calculated the theoretical X right price, and everything is ready now. What we are going to do now, we are going to calculate the weighted average number of shares, the most important task, weighted average number of ordinary shares. Now, how are we going to calculate it? On 1st January, we were already having few number of shares in action, that is 10 million. So 10,000 shares were already in issue. And let's see when the change has arisen. Yes, further shares were issued at the end of the March, which means January, February, and March, which means that is after 3 months, that is multiplied by 3 and divided by 12. Okay, let me give some space over here so that I can write it down before. So 10,000 multiplied by 3 divided by 12, and this was issued on 1st of January. Okay, now let's move on. Okay, what happened that at the end of the March, the further shares were issued, that is 5 million, and these were issued at full market price. Nothing is written, it means it was issued at full market price. So which means 5,000 shares were issued, which means in aggregate now there will be 15,000. Remember, I'm not writing down the 5,000. Why? Because we are writing down the balance over here. So 15,000, and this was issued, and we can see that in April. Yes, to make it simple, it's in April. And when the further shares were issued, and it was issued in the month of June. So April, May, and June. June means at the end of the June. April, May, and June. So we're going to multiply it by 3 divided by 12. So we are having further issues, and we have issued 20% bonus shares. And remember, these 20% shares are issued on the existing shares, and the existing shares are 15,000. So 20% means the company has issued 3,000 shares, and the total shares would be 18,000. Okay, so 18,000 shares were issued at the end of the June, or we can say that at the start of July. So July, August, and September, because further right shares were issued in the month or at the end of September. So July, August, and September, again 3 months. So we are going to multiply it by 3 and divide it by 12. Now, what happened that once we have issued at the end of the September, 40% right shares were issued. Again, these 40% right shares were issued at the end of the September, or we can say that at the start of October, and these were issued on the existing number of shares, and the existing number of shares were 18,000. So 18,000 multiplied by 40, which means 7,200 plus 18,000. So this will make 25,200, the total number of shares. And after this, there are no further issuance. So October, November, and December multiplied by 3 divided by 12. You can reconcile it. If these number of months will be equal to 12, so it means you have done the perfect calculation. Now, one thing that I need to note it down, that on 1st of July, we have issued the bonus shares, and on 1st of October, we have issued the right shares. Now, listen to me very carefully. All what you have to do, you need to apply, first of all, the bonus. That's it. What I've told you, that apply the bonus shares in such a way that it was in existence right from the beginning. So how we can do it? Just apply the bonus fraction. Remember, please underline my words. Apply the bonus fraction to all the shares that were in issue before the bonus shares. Before the bonus shares. If you just look at, so before the bonus shares, we have two, number 1 and number 2. So the bonus fraction, please, now you have to be very alert. We need a bonus fraction that is related to the bonus issue, and that is 120 over 100. First, we are dealing with the bonus shares. So 120 divided by 100. 120 divided by 100. Now, what is this? This is basically the bonus fraction. This is the bonus fraction for bonus issue. Okay, so we have applied it. Why we are not applying it to the onward shares? Because in these number of shares, the bonus shares are already in action. In these 18,000 and 25,200, bonus shares are already available. So the bonus fraction related to the bonus issue is not needed to be applied in these last two issuance. But yes, in the previous shares, there were no bonus shares in action. So we have applied the bonus fraction to all the shares that were in issue before the bonus shares. Now, same rule is for the right shares, that if you are issuing the right shares, there is a bonus element. And IAS 33 states that apply the bonus in such a way that it is right from the beginning. That is, it is right from the beginning. So how we can apply it? How we can apply it? So apply the bonus fraction related to the right shares. Remember, apply the bonus fraction that is related to the right shares to all the shares that were in issue before the right shares. And if you just look at before the right shares, we have 10,000, 15,000, as well as the 18,000. So we will be applying the bonus fraction related to the right shares to all the shares that were in issue before the right shares. So first of all, the bonus fraction for the right share is 15 divided by 14.14, or to make it simple, it's 1.06. So we are going to multiply the bonus fraction, and this time it is related to the right shares. It is related to the right shares, so it will be applied on this one, right? 1.06. It will be applied on this one as well, and it will also be applied on this one. Are you guys getting a point? Because before the right shares, all the shares, whatever the shares you are in issue, all the shares that were in issue, this bonus fraction related to the right shares will be applied to all the shares that were in issue before the right shares. So we have applied the bonus fraction over here, and definitely no bonus fraction will be applied on this last one. Why? Because in this 25,200 already the right shares are in issue. Now what we have to do, we need to calculate, we need to multiply it. Let's try to multiply it. 10,000 multiplied by 3, okay, multiply by 3 divided by 12, multiply by 120 divided by 100, and multiply by 1.06. So this will make 3180. Now 15,000 multiplied by 3 divided by 12, multiply by 120 divided by 100, multiply by 1.06. So this will make 4770. 18,000 multiplied by 3 divided by 12, multiplied by 1.06. This will make again 4770. And 25,200 multiplied by 3 divided by 12, and nothing else. So the total weighted average number of shares is 4770 plus 6300 plus 4770 plus 3180. So this will make 19,020. So this is the weighted average number of shares. And in order to calculate the base EPS, what we have to do, that is the profit after tax, which was, I think, 80 million. Yes, it's 80 million. Profit after tax is 80 million. That is 80,000. And it's thousands. And it will be divided by 19,020. So 18,000, sorry, 80,000. 80,000 divided by 19,020. So this will make $4.2. The basic EPS is $4.2. So this is known as what the basic EPS, assuming that if, for example, the EPS for the last year is given. If the EPS for the last year, EPS for 2023 is given, and let's say it's $6. So in order to restate the EPS, what we have done, we have to multiply that $6 with the inverse of the bonus fraction of both the bonus issue as well as the right issue. If you just calculate, if you just identify the bonus fraction related to the right issue was this 15 divided by 14.14. So in order to restate, 14.14 divided by 15, and the bonus fraction related to the bonus issue was 120 divided by 100. So 120 divided by 100. So it will be multiplied by 100 and divided by 120. So it's just an example. So let's calculate. 6 was the EPS for the last year. 14.14 divided by 15 multiplied by 100 divided by 120. So this will make $4.71. This is the restated EPS of 2023. That now why we are calculating it, so that we have a comparison, we have a like-to-like comparison. Right now we are having an EPS of 4.2, and now last year the restated EPS is 4.71. Now this is comparable. that we are applying the bonus fractions in such a way that it was right from the beginning, and now the EPS of both the year is comparable. Now you can compare the performance, that yes, the performance is satisfied. Otherwise, if you will just see the EPS for the last year, it was $6, and now the EPS for the current year is 4.2. So there was a substantial decline. So investor will never take the decision on the basis of this one. So investor will always restate the EPS by multiplying the inverse of the bonus fraction of both the bonus and the right issue. I hope that this lecture was very useful for you guys. If you have any confusion or the query, definitely you can reach me out. Thank you for watching this video. Allah Hafiz.